On July 26, 2022, MarketWatch printed this article. Big tech earnings are about to determine the direction of the market. Just 5 companies, 5, control nearly a quarter of the S&P 500 index market cap, and they all report earnings this week that could determine the direction of the market for weeks to come. They reported yesterday and today.
And Meta will report tomorrow. Where is this market going? And where should you buy in? Where should you get out? What should you do from this point on? That's what this video is going to be about, and we're going to explore it in depth and determine, is this a good thing, and what's going to happen next?
Best of Us Investors presents Carrie Griegmeyer.
Okay, as I said, the market has already reported on, I believe it's Apple, Amazon, Google, and Microsoft, and we're just waiting on that of Facebook or Meta. And the interesting thing is, even though they all came out with disappointing earnings and indicated that they're going to be laying people off, and the stocks are up today. What does that mean to you?
It means absolutely nothing because, if you look at these companies have reported, Google and Microsoft both reported declining earnings per share and revenue. They're laying people off or they're freezing hiring. The thing I think the market is, the futures are up today, was it Wednesday the 27th? And the futures are up before market opened. And I think it's merely we are waiting for a confirmation from the Federal Reserve that they are going to raise rates 75 basis points into a recession. So that means sucking liquidity and making the cost of money go up by raising interest rates. The market is waiting just for that one confirmation. That it's that whole buy on the rumor, sell on the news.
Yeah.
And this morning or last night, overnight markets bought Google and Microsoft, even though their reportings weren't great or good, and they're indicating that they're shrinking their workforce and cutting costs. The market in the short term is waiting for the Fed to confirm, in my opinion, that they are going to raise rates. And when they do, and I think it comes out probably around 1 o'clock Central today on the 27th, you'll see then the market will go down. The market will start selling off, and it will confirm that the market does not like the idea that the economy is contracting, and these companies are leading indicators of it. But in all bad situations, there's a possible opportunity.
Well, I think the opportunity is going to be an event will occur that will take this down further. I believe that we have not seen the bottom yet on this, and I'm looking to become a buyer at that point. I believe very strongly in Apple, Amazon, Google, Microsoft, and Facebook someday in the future, but not in the current day. And so I'm looking for that event, and I believe that event will revolve around either Vladimir Putin in Ukraine or some geopolitical event that says this is scary and will flush out the market. And I'm looking to buy Apple at about 125. Amazon, it's currently at 118. I want to buy it under $100 a share. The same for Google. It's currently at 110. I want to buy it under 100. And Microsoft's at 264, and I want to buy it at 225. So, and why is that? Because these are the companies who are going to take us into the future. They have the talent. They have showed they have the adaptability. The other thing that I think is going to happen is when Apple, Amazon, Google, Microsoft recognize we got to cut back, shortly after that, there's going to be a bunch of people who are going to say we give up.
Mm-hmm, right. And I think the retail investor typically, when you see another drawdown in the market, retail investor is the last person of the party. The institutional investor, the corporations, they're always the first to go. And over the last 6 months, you've seen them scale down their overall risk exposure. But the retail investors just hung in there. The financial advisors of the world haven't seen their phones really truly blow up at the level they will, in my opinion. And I think that's where that's when you see, as was it Warren Buffett says, when the tide goes out, you see who's wearing swim trunks,
who's not wearing
swim trunks. I think that's one of the things. The one thing I would add in here as a catalyst to this next drawdown, this next was a percolation or what have you, is the Chinese banking system.
Yeah.
On a regional level, there is some issues in their regional banking system where they're not allowing withdrawals. And this is...
Wait a second. You told me yesterday you had seen a picture of a tank parked in front of a bank to keep it protected from a run in China.
So I use TikTok, and some of you may just roll your eyes at that and go, oh, well, that's not a reliable source. But what TikTok is equal to what Twitter began as, and that was a independent news source that gives you insight to what the people on the streets are actually seeing. So I'm flipping through TikTok the other day, and I'm seeing this picture, and it's a live picture, a video picture of this guy sitting out in front of these banks, and this is on a regional level, a small level outside of probably Beijing or Shanghai or Hong Kong, and there are tanks pulling up in front of these banks. And there are protesters, and they're protesting because they can't get their money.
Right.
Okay, so we all, Michael Berry called it back in 2005, I believe, and he said that the housing market and the way bonds were being, mortgage-backed securities were being rated was a sham, and he went short many years and got much flack for it, but ended up turning out to be one of the greatest trades in history.
Right.
What is that next catalyst? Is it a Vladimir Putin? Is it a Ukrainian thing?
Is it a collapse of the China banks?
Is it the collapse of the China banks? Or what else could it be?
Yeah.
And that's, I think, the thing that when you look at these companies such as Google, Amazon, Apple, Meta, Microsoft, they all are foundational built types of companies. Now, some people will look at Meta and go, what's Facebook got to do with anything? If you dig deeper, and I'll give you a quick story if you don't mind.
Sure.
I'm dropping my car off at the local Chevrolet dealer to have it serviced, and I get a ride back to my house. And the dude, and I emphasize dude, who's driving me, and I start talking. And we go back and forth, and he tells me he's a gamer. And I'm like, oh, well, cool. And I said, I just have a question. What's your take on Meta? And he said, the Facebook thing and the Instagram thing isn't what you should be looking at. It is their technology, AI technology that you need to get into. And they're getting into that whole gaming world, which is a multi-billion-dollar industry right now. Mm-hmm. He said, that's where it's at. And that technology they're building. And remember, this is the dude who probably spends 4 to 5 hours a night on gaming and is one of those target markets for the gaming industry, but he is up on technology. And this dude is rattling off PhD level economics to me about Meta. And I'm like, oh, that's interesting. But as he said to me, it's just a matter of time. It will take time for them to come about. So does Meta's earnings tonight, when they report, if chances are they're botched because advertising dollars are shrinking. We saw that in Snap. We've seen these in other companies like Google. Is this create an opportunity that we'll see a drawdown, some big event happen that it will present an opportunity to buy, in this case, Meta, at a really discounted price?
Speaking of Meta, I'd like to take us to Seeking Alpha and to Trading Views to get a little bit of history as to why I believe there is a buying opportunity on Facebook or Meta and let's determine a price that we'd like to buy it. Okay, this is my Seeking Alpha page on Meta, and the first thing that jumps out at you is that over the past year it's down 55%. Year to date, it's about the same, of about 50%. And so what strikes me as I look at this stock is really beat up, and it is one of the largest tech stocks, one of the largest tech stocks in the S&P 500. And Seeking Alpha authors all have it as a buy. Wall Street has it a buy. Quant Computing has it as a hold. And if you look at the articles here, everybody is saying it's got some short-term headwinds, long-term profits or promise, and that it's they're cutting jobs and they're becoming more conscious of their profitability. And that's a good thing. And the company already generates a lot of money. I just believe that it has lost its way. It needs to reinvent itself. And so I'm looking for a place to buy in. This gives me a lot of information. Then I want to go to my trading views and look at the recent history of Facebook, Meta, to get kind of a feeling as to where I want to buy into it. And as you can see, I'm charting that it went from what a price at the height of the pandemic from 138 to in November it went up to 383, a phenomenal return. And then my Fibonacci says that logically it would come down to 261, and as you can see it went right past that, and that was a result of Apple's indication that we're not going to give you, Facebook, the data that we have in the past as to where people are going once they come to Apple-supported apps. And as a result, it went down it's currently down 56% as to where it's priced at right now. I see a support level, very obviously, at about 154, but I actually want to go down to the price it was in at the bottom of the pandemic and get it down to around 138. I've actually put a price tag on it because I think it's got a 20% drop potential of somewhere around 131. If I could buy it at 138, that would be fine. So that's how I look at it. And then I have to ask, what's going to make it drop that far? And it's going to be an event. It's going to be an event that you're going to say, you're going to see it on the evening news and you're going to say, oh my God, what does this mean? And that is going to be a collapse of the Chinese banking system, a collapse of the Chinese government, an overthrow of the Chinese government, an aggressive act by NATO or the U.S. against Russia, an assassination of somebody key into that. Some event is going to happen, and it's going to bring Meta down to where I want to buy it. Let's talk about that a bit more. And my price, it's currently at 164. I'd buy it at 131. And again, understand that there's just so much going on. We talked about China, and how does that relate to these stocks? Well, if the China's banking system fails, the repercussions are going to come through our banking system. Mm-hmm. As when our banking system failed back in 2007, 2008, it went across the world. Mm-hmm. So be aware that we are not out of the woods yet. At least that is my opinion.
Yeah, I agree. And I think the other thing is, if you're an indexer or a passive income investor, something you have to be aware of, the S&P 500 is market cap is represented by 23% of it is represented by these companies: Google, Amazon, Apple, Meta, and Microsoft. 23%. So if they sneeze, the S&P goes down.
Okay. I think that's a take on, as we said, it was a Very interesting article from who?
It's from Market Watch. It was July 26, around 1:50 or so p.m. that was published. So go to marketwatch.com and check it out for the details.
Better than that, I'll put it into a PDF and put a link to where you can come, and I'll send you a copy of this. And I'll include some charts that I think are, or spreadsheets that show the movement of these 6 stocks over since their IPOs, and it will show you we've been here before. This has happened before. I love to reflect on the fact that in 2000, Amazon lost 80% of its value, and in 2001, Amazon lost another 40% of its value, and then went to $3,000 a share. So be aware that events control the market, not so much earnings and market activity. Watch the events. Pay attention. I know you don't like the evening news, the 5:30 news. Watch it. Watch what the lead story is, and then be aware of how that's going to affect your investment portfolio.
Just to throw in a little ad,
As
weird as it may be, jump on TikTok and type in China banks.
Yeah.
Or some geopolitical thing, or on Twitter. Some of these are very independent news sources, and you got to check their facts, but in some cases they come out with stuff that the headline news is never going to report because, well, it's damning to the existing administration.
Okay, that's our take on the current situation in the stock market. We want to be here to help you determine what happens next.